Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Handtech Markets. Each week I'll take you through the key events that I believe will be driving your investments in the coming days. Into the new week, certainly the sanctions that are going to be levied against Russia are still weighing on investors' minds. This is creating a little bit of caution in trading and a certain amount of consolidation within the stock markets. FX markets are a little bit less so. They've got a little bit more direction with some dollar strength, but certainly within the equity markets there's a nice amount of sideways movement that we're seeing at the moment. Bit of caution in front of a pretty heavy week of data, to be honest. Now, certainly, as I said, these sanctions that are going to be put against Russia are significant. They could be ramped up to tier 3 economic sanctions, which means that they're going to be targeting sectors on the financial side, defence and possibly energy as well. So quite how the market is going to react to that remains to be seen, which is why I think we're seeing a bit of this caution enter, and also what exactly Russia's reaction to that, whether they'll be putting some sort of retaliatory sanctions on the European companies such as BP, which have got a big presence in Russia as well. So this one's yet to be played out, and certainly the ongoing investigation over the MH17 disaster will certainly have an impact on the markets as well. So lots of uncertainty that's certainly driving markets at the moment. Now, in terms of the US earnings season, very good earnings season so far. We're seeing some nice, well over half the companies that have announced so far. About half of the S&P 500 have come to the market with their announcements, but just over half of those companies that have announced have beaten earnings and also revenues as well. There's around about 11% earnings growth that we're seeing for the quarter, which is a nice bounce back, and also we're seeing some decent outlook statements for Q3 as well. So a pretty positive earnings season for the States. Now, in terms of forex markets, what are we looking at? Well, we're certainly, as I said, looking at some dollar strength over the last couple of weeks, and that has been driven, I think, by certainly this flight to safety, which has helped the dollar and certainly been pulling the euro lower, and also cable as well. So those are two big currencies that have gone in terms of the dollar's favour, and also the yen as well. The yen has weakened. In terms of the euro, we've seen the euro pull back in a nice step decline. It's significantly weaker than it was 2 weeks ago, and it's back now towards that back below $1.35 and pulling towards the target from the implied double top pattern that comes in around $1.3375. Now, it is a little bit oversold, so you might begin to see a little bit of a technical rally, but I still see any sort of strength being sold into on this euro chart. In terms of cable, what are we seeing? We've got cable now below $1.70, which is a big level of psychological move for cable. Now that $1.70 is a near-term bit of band of resistance now, but I think that there is beginning to form a bit of support. The last couple of days you've seen cable trade a bit sideways, and also that comes in around that $1.6950 support level. Now, the indicator you need to watch out for on cable is the 89-day moving average. That comes in around about $1, just under $1.69 at the moment. So it's continually creeping up, and that has been the big support for the last few corrections in 2014. So just watch out for that. Now, in terms of dollar yen, we've seen a pretty strong rally. The rally in dollar yen has gone much further than I thought it was going to go. Usually in dollar yen over the past few months, we've seen 3 or 4 days to the upside and then a big retracement back again as the yen has strengthened once more. But over the last few days, we've had, I think now, 8 days of dollar yen climbs, and that's pulled it back towards that pivot level around 102. Now we're beginning to see a little bit of resistance come in around 102 and a little bit of possible profit taking, but I think 102.30 is a key resistance, and also once again the 89-day moving average is a resistance now on this dollar yen chart, and that comes in around that 102 big figure level as well. So a couple of reasons why we might start to see this rally slow down. Now, okay, so across the equity markets, we're still looking at some Wall Street outperformance, and as I said, that's been driven by earnings season, but also the fact that Wall Street is to a certain extent insulated from the Russian tensions in Ukraine, and that's due to its energy markets independence and also the lack of trade that it does with Russia. Compare that to the European markets, where Germany has probably around about 25% of its energy needs come from Russia, and also has a pretty sizable trade with Russia as well. So Germany is a big underperformer, certainly on the DAX. In the last few days, you'll see that DAX, whenever Russia and Ukraine issue tends to flare up, the DAX will underperform. So that's something that you need to be aware of. Now, okay, so in terms of the S&P 500, where's it going? Well, it certainly continues to look strong, pushes higher. Last week it hit an all-time high of 1991 before pulling back, and I think it still continues to find support at higher levels, and I think that it will eventually push towards that 2000 level. There's no real reason why it shouldn't at the moment. So for the DAX, you're looking at it's come back to support around 9,600, and that 9,600 level needs to hold, because that, if it doesn't, then you're looking at 9,400 again. But there are certainly now beginning to be signs of long-term creaking in this uptrend that it's been in, and a few bearish signs that are coming in, such as the 144-day moving average being breached, the big primary uptrend also being breached on a couple of daily closes as well. So some signs there are for the bulls that they're not as strong as they once were. In terms of FTSE, it's a little bit mixed, you could argue, but it's now trading back around that resistance at 6,800, and I think that's a little bit of a near-term line in the sand at 6,800, because if it can start to trade above there and find support, then equity investors can start to think about possibly a launch on its key high at 6,895, but I think that's a bit of a line at 6,800. Now for gold, as I said, gold is a little bit choppy at the moment, and it is definitely moving on this geopolitical event in Ukraine and Russia. Every time the tensions flare up, the gold price will find support and push strongly higher. Now that has created for very choppy trading over the past few weeks as the story has moved in and out of good and bad news, or bad news and better news, but certainly at the moment the gold price is now starting to form support around 1280, which is a technical level, and then and also at 1291 as well. So a couple of interesting technical reasons why that possibly the gold is becoming a long-term buy again. Okay, so for the rest of the week, what are we looking at? Well, you've got on Tuesday, you've got the consumer confidence for the States. That has been pushing ever higher over the last few years. That continues to suggest an improving economic outlook. And on into Wednesday, you've got the big economic announcement starts to come through. You've got GDP for the States. You've got the ADP employment number, which, as always, comes 2 days before non-farm payrolls. And then into the evening, you've got the FOMC rates decision. So lots going on Wednesday to concentrate on. Into Thursday, we've also got the Eurozone inflation data. Now, that HICP, if it comes in around 0.5% expected, which is the forecast, that would be again flat on the month, and it would be a little bit maybe euro supportive, but certainly if the German data starts to drop away, which you've got the German CPI on Wednesday, then that could lead the Eurozone inflation rate lower again. So a little bit of uncertainty as to what we're going to see throughout this week. Now, onto Friday, we've got a significant amount of data. We've got all the PMIs in the morning for China, the UK, Eurozone, and also the ISM number for the US in the afternoon. But then also we've got the non-farm payrolls data, which obviously the market is consistently very interested in. But also we've got the unemployment data, the participation rate, and also hourly earnings as well. So lots to be driving the market on Friday that we need to be aware of. So I think it could be a fairly volatile end to the week, but at the moment, the first couple of days, Monday, Tuesday, have been fairly sedate, but I think that will change as the week goes on. So until next week, I wish you good luck in your trading, and I'll speak to you later. Thank you.